Quarter 2 was good, and the stock price shows that as well. But what is the outlook on Quarter 3? How has the demand panned out so far, and which geography is now expected to do well for you?
Thanks, Sonal. Thanks for having me at the show. I just wanted to correct the profit growth. Actually, is 32%. It's 388 crores. And so we had a really good quarter, a balanced growth across all geographies we are in: India, UAE, GCCL, we call the GCC countries, and Saudi. All of them grew 23%, India and UAE and GCCL, and Saudi was at 10% across all business units. SSG, the Software Solutions Group, grew at 48%. The mobility, the smartphone business grew at 18, and the technology solutions and the PC business grew at 9 and 11. The outlook remains very positive still. All of the geographies we are in are experiencing good tech investments and growth. Clearly, the cloud business, cloud security, software solutions investments in all the geographies we are in, the infrastructure is growing. On the back of that, we're able to sell more of these. The data centers are also growing, so we'll get a portion of that. And it's exciting to see the PC business finally coming back. This quarter, we had a double-digit growth on the back of a bit of 10 to 11 refreshes, as well as slightly higher AI PC penetration. And the second half, we expect more of that. So all of the businesses, software, mobility, and the PC business are all expected to grow. And we do have some big deals in the technology solutions as well in the pipeline and the funnel. So overall, second half looks positive while we have had a fantastic Q2.
What's the outlook on margins, Mr. Hariharan? I think last time you indicated that there could be some pressure on gross margins due to higher large deal wins. And you had given a guidance, I think, operating profit margin of 2.3 to 2.5% ex-Arena.
Yeah.
Do you maintain that, or is there going to be a change?
Yeah, thanks, Rima, for the question. Yes, absolutely. So this the key driver is Software Solutions Group, which is growing at 48%. It's at a higher margins, coming at higher margins. It was 15% of our business last year. In this quarter, we reported 16% of the business comes from Software Solutions. So that's shoring up our margins. Mobility business also this quarter has delivered higher margins. We've had good growth, but there has been constrained capacity as well. So there is a good demand in the premium segment, particularly at higher ASPs. And the PC business with the higher AI PC penetration, we do expect to see a better ASP, average selling prices. So our guidance still remains at 2.3 to 2.5 in the EBIT part of the EBIT metric. Yes.
Okay. And Arena, which is, I think, the Turkish business for you. What is exactly happening over there? And last time you indicated that you are exploring options on what best to do with Arena. I think you're even open to the idea of divesting it, selling it.
All right. So as you know, Turkey has been stressed due to a combination of reasons. Inflation rates were high. Interest rates on lira were about 50. They have come down to below 40 now. And the market is stressed because the business opportunity is declining. And because of all this, there are also concordat cases like bankruptcy cases, etc. So we've been progressively taking actions over the last few quarters. And this quarter, we actually exited from the Vodafone Arena Connect business. And that was a business which was largely centered around lira. High working capital requirement, and at high interest rates, 40+% interest rates, it was becoming a drain. And so we exited from that. It'll take 2, 3, 4 months to execute this exit. We are increasingly focused only on the US dollar business in Turkey, and focused on the IT business and really getting the good quality business focus. So we see progress. We're also working on working capital improvements, OPEX improvements. So progressively, we are improving our business there, and we should see our losses go down and turn to profit in the next 2 quarters at most.
Mr. Hariharan, your value business, you have earlier highlighted that you wanted to keep it at 35% as a contribution to the overall business, so that to sustain those margins at higher levels. What was the contribution of the value business this time around, and what trajectory do you see for the second half?
You're bang on. So this quarter, the contribution was 35% between Software Solutions Group and the Technology Solutions Group. The contribution was close to 35%. The mobility and the PC business being the balance. And we expect that only to grow in the contribution because the Software Solutions business is growing very rapidly for us at 48%, as I mentioned earlier. And the Technology Solutions piece of the business, we see a lot of data center deals and a lot more deals. So we expect that contribution in Q3 and Q4 to increase only because typically second half we get more value business because of year ends and budgets and all of that. So we do see the contribution going about 35%. We're already at 35 and it'll go more.